Hi, everyone. How are my trading warrior brothers and sisters doing today? I'm Dale Pinkert with TradeGATEHub.com, powered by TradeView Markets. I wanted to start off with the gold-silver ratio because this is a very important chart for whether or not we're going to see a continuation of a bull market or an interruption in the bull market in precious metals. It's my contention when this pair is heading up and the gold-silver ratio is increasing. And as you can see by this pattern here, we have a bit of a symmetrical triangle. And I believe there's a chance for a breakout to the upside, which means that silver will be weaker than gold. And this portends weakness in both, only more relative weakness in silver. So I would be careful with long metal positions. Perhaps it's just a short-term breakout and we get up towards 83. If you look at the weekly, there's a big moving average, 200 week moving average up around a little over 82, 83. But this looks poised to, give us one more high. Here's a first drive, here's a second drive, and we get a third. And I just wanted to caution precious metal bulls that this will, should this manifest, there's going to be better buying opportunities in the metals, even if they rally. So what you want to see is this kind of run, and this is silver leading, okay? This is silver and gold moving sideways together, and then gold started to act better and has since last year over silver, and we could get a continuation move up here, which is going to create cheaper silver. I think eventually I'm going to be able to, people will want to call the ambulance, but I think we'll be able to buy it under the 21 handle. Last week, I did say in the silver that there was going to be buyers at 24. That's where you had a lot of confluence of major moving averages right here on the daily. And that's exactly what happened. People bought it very, not much follow through after this candle. Whereas you look at gold and gold's looking a little better, like it could push. So silver acting weak, it's a simple arithmetic. I say if you could add and subtract, multiply and divide, you can trade. It's really market geometry. And if you just take measure the move from 24 to 27, we start breaking down under 24. That's going to take you down towards 21. That's just simple subtraction of a $4 move from 24. $3 move from 24 gives you 21. That would be new lows. So if I'm correct on my diagnosis of the gold-silver ratio, that's where I think I'm going to be able to make some long-term buys in the silver market. I also wanted to concentrate on what's happening with yields and the yen, because the yen did come off its big top. I'm not saying this is the top in yen, but to me it looks like there's a descending triangle beginning to develop, and you'll see it's even, I'll just guess to where it might be able to fill out to, something like this. Maybe you could rally back to here, that's a breakout from this downtrend. But I'm looking for a failing rally somewhere here. I didn't do the fibs on it, but I'd be looking to short yen for a move back to 117, which was the throwover that we had a couple of weeks ago, where we had that big acceleration in both yields right here and US dollar yen. So very possible we get a correction here, and then we'll, it could be a very good longer term buying opportunity. So I wanted you to take a look at the yield chart here. And this looks pretty classic, like a head and shoulders formation, could be developing. The breakdown is going to be under, say, 229, which this is about a 21 BIP range. So that's going to take you down to maybe 208. So what I'd be looking for is some type of contrarian vibe and talking about how I like the bonds. And I wanted to show you guys this. And some of the best trades are when you have breakdowns that turn out to be false breakdowns. And if you look at this low that we had after the COVID and yields began to normalize again, this looked like a breakdown, right? But then if you look at what's happening here, we're on the verge of negating the breakdown. It's one of the most hated asset classes, and for obvious reasons. Who wants to be long bonds in a tightening cycle? And the Fed's going to go another 50 in May. And I'm saying that perhaps the bond market's discounting it, and this is a pretty bullish formation. I don't see why we couldn't at least have a correction in the bond market, just like the yen on a failing rally could trade back towards this 117 level, 118. Why can't TLT, the bonds, rally back towards, 140, 142. And I do think that part of the yields dropping, what would be any reason that you could think of yields dropping in the midst of a Fed tightening cycle? The last time the S&Ps went down on this big leg that we had here, bonds found no flight to safety. They both went down together. That's how it's going to be when we enter a sovereign debt crisis. I just talked to our buddy Luke Roman, and that's what he's looking for. The Fed's going to have to make a decision between wanting to not go into recession and reverse again from tightening to printing, or we're going to have a recession. So it's my thought. We had a pretty negative week in S&Ps. Look at that, kind of a failing rally. Kind of the same thing here in NASDAQ as well, that anything that could spark a drop in yields and a rally in the bond market could be risk off. So when you look at S&Ps, we're back at this pivot after shaking out shorts here. My contention is for S&Ps to stay bullish. I've been pointing towards this one day. This was 2 weeks ago or a week ago when Powell was super hawk and the market was able to recover and hold. Last week, I thought we were getting a little bit overbought, and 4,400 or so is going to be a very important area to hold. It's that low. Plus, you're talking about the 200 week coming in there. I wouldn't want to see it pull all the way back to check the wedge out. I think that would only probably set up a bear market rally. So for a continuation rally in the market, I think 4,400 has to hold, and there could be a decent scalp between here and there. And I now want to cover the oil, which held 100. We talked about this high up here at 116. Looks like it's holding. In fact, we have kind of a war board going on today where you have a strong dollar, you have gold up, silver weaker, and as we speak, gold is up 740 and silver's down 8. They almost look like two different markets, and the gold silver ratio is continuing to pressure to the upside. So the fact that euro is trading back under the wedge line for now the third time that it couldn't hold that 110.20, and looking at the dollar last week, caught a nice rally in euro pound, but we held this range again. We've been range bound in the dollar going all the way back to March. This was March. So for well over a month, we've been in this range. It's anyone's guess which way it's going to come out. Is this a failing rally, or are we going to make new highs first? You know what my answer is? I don't know. I could guess. The fact that it held here and the euro's not holding 110 makes me think that we're going to get one final blow off to the upside in the dollar. And even though it looked like we had a false breakout on Friday, the fact that we're back here, you have to continue to be flexible. And when you have profits made, like from last week, there were, EG was a buy at 61.8, which was right here at 83. And you had a 200 pip rally. If you don't learn how to take partial profits on a move like this, I don't think anyone could help you. But that was a good call. It's going to be interesting to see what EG does on a pullback, and should the dollar make one more high. Last week, I talked about it on Monday. I thought one of the reasons we can make a new high, even though it's really just a guess, is there is some evidence. And the evidence was, as I said last Monday, I thought we'd have a new high because this was a confirmed high. As you can see, new high in price, new high in the RSI reading. And this time on the daily, if we move up towards par, I don't believe we'll trade over 70. And I think it's going to just take one more flush, one more push up in the dollar. And I'm looking for long dollar positions. So will the euro make a new low and go to 108 while the dollar is making a new high? It may not. So, it's very possible that it holds the 78.6 level when these fibs are going to change now. These fibs were from measuring this as the high. So now we have to, go to this. I don't know if it's going to work for me here. Anyway, I have to remeasure the fibs, so that's not the fibs. So, it's going to be real interesting. Here's what I say. Here's the euro on a weekly basis. And I know everyone wants to hit it on the nose and wants to use a lot of leverage so they make the most amount of money on a smaller move. But every once in a while, what you want to do is put on a position with a wide stop and really risk the low. So I'm going to be looking at pullbacks when you think about what the potential could be on the upside to risk, say, 200 pips for a that at objectives once we break out could be 10 cents, 20 cents. You scale in, but you don't use leverage. Maybe you use 2 to 1, not 10 to 1. Okay, so it won't bother you if you go from 109.90 to 108.90. But I don't have an idea for an entry right here. Maybe I will by the time I'm back on Wednesday, but I don't like that it's not holding the 110 level. And we may, try and take this out first, and I'll be patient and wait for one more new high in the dollar, which is only 50 away, and see what RSI looks like up there. But I am definitely, the end's already starting to fade, that I think this is a descending triangle, and you could be short here with stops over 24. And not coincidentally, but if you go from 125 to 121, that's 400 pips. And what that would take you back to is the throwover line down here at 117, 118. So that's what I'm looking for in the yen. Also looking for a nice rally in the bond market. Stock market's rallying back here right now. And we're getting a pretty good rally here also in NASDAQ. So every once in a while, there are days where you don't have a lot of conviction in different markets, and you just have to stand pat and be patient and wait. I think one of the important things to wait for here is the dollar to make a new high and see what RSI readings are going to be there, and also look to be fading US dollar yen, especially if the dollar makes a new high and US dollar yen puts in a failing rally. I want to invite everyone to join us here in TradeGATEHub.com. And if there's times in the market where I don't see a lot of setups that mean something to me, I'm going to not pretend that there's anything that compelling to put you into a trade. So good luck today. Mike will be with you in about an hour and 17 minutes. Good hunting, and trade well. You don't have to trade unless you see something. And I just want to point out one more thing before I leave you, and that would be, have sanctions really hurt Russia? So they're still selling their oil to India. They're still selling their oil to China. Those countries are buying rubles and getting a 30% discount. So I think it's pretty interesting that they're, even though on the battlefield, they're not doing well, on the financial battlefield, that's one heck of a recovery in the ruble from what happened after the invasion. So thank you very much for paying attention. Good luck. Tune in to Mike. Mike always has convictions on different trades, and the market's up. This is this kind of market, and we'll talk on tomorrow. Mike and I will be on together, but you could catch Mike solo act in an hour and 15 minutes. Adios, everyone. Remember, don't just count your pips, count your blessings.